Hey, what's up guys, this is Mario, and in today's video I'm going to go over the day trades that I made today and why I made them, step-by-step information and what exactly did I look, what was my thought process to make these trades. Now one thing I want to make very, very clear that has actually helped and changed my trading career is that there is a difference between the pattern and how they actually give you a high probability of success. Now, momentum is really what pays you. The patterns, if you combine momentum with a pattern, then you have a high probability trade. Now, if you just have a pattern but no momentum, then there's really not a good opportunity to make money. So I want to make sure you guys understand that, because when there's no momentum, you can have the best pattern that you've traded for many, many times or many years, whatever the case may be. But if there's no momentum, most likely you're not going to make money. It takes momentum to make money, volume. And I'm going to explain that today. All right, guys, let's get started. So what I traded today, I actually traded MDGS. Now, why did I trade MDGS? First of all, it was in my momentum scanner. So momentum scanner, I built a momentum scanner that tracks momentum. And pretty much the biggest thing about that momentum scanner is volume. There's no volume, there's no momentum, pretty much. Basic as that. So MDGS was in my momentum scanner. DWT was in my momentum scanner. There was others that were momentum scanner, but they did not have good patterns with high probability of trades. So again, first you need momentum. Second, you need a good pattern. That's very, very, very important. Again, if you don't have one or the other, then you don't have a trade. Pretty much as simple as that. So first thing is momentum. Again, I looked at my scanner, see what my scanner is tracking, see what this sees, where the volume is, where our traders are making or trading, making their trades, where the volume is at. Second, is there a pattern that I trade with high probability of success? That's the second thing. So that's what I saw on MDGS. Now, MDGS is sort of a catalyst, PR news catalyst. If you look at the one-year chart, you could tell right away that it broke out of these levels of resistance. So right away, I knew that there was an opportunity for a trade based on my setups that I usually like to trade these type of setups. Now the second thing was to look at the intraday chart. I needed to see what was happening. So pre-market, there was a nice ramp, pulled back, and there was a definitely strong open at the open when the market opened at 8:30 a.m. Central or 9:30 a.m. Eastern. But then it pulled back. So as it pulled back, I also noticed that, because I do trade with interactive brokers, I also noticed that this stock was heavily shorted and there was actually no more shares to short. So that told me that there was an imbalance of shorts versus longs. So usually what happens on these type of low floats, which MDGS is a low float, when there's too many people shorting a stock like this, the opposite tends to happen. Why? Because if price reverses and it hits all the short stop losses, in order for them to cut their losses, they're going to have to buy the stock to cover, and that kind of creates the reverse effect. For short sellers, they make money when the stock goes down, but because it's heavily weighted on one side, and if the opposite starts to happen, short sellers are going to get freaked out and they're going to start buying, and then you're going to get these spikes. Which for me, that is my edge. That gives me an opportunity to make money, to kind of squeeze out these shorts and make money on that, I guess, on that movement, on that momentum. So I wanted to show you guys really quickly MDGS's float. I think you guys will learn a lot from that because, there's different types of floats, and I was actually confused for a very long time as to what floats are best to trade on trades for day trades. And for me, what I noticed is the stocks that trade below 50 million shares are the best, and for the short squeezes, to actually squeeze out some shorts, actually less than 5 million or actually less than 10 million. So this is a micro float. There's 3.84 to trade. So because it's such a low float, anything can reverse the stock and really short squeeze and make some damage on these short sellers and really squeeze out these short sellers. And that's pretty much what happened. If you guys could see in the morning, as there was a pullback, it started to create higher lows and higher lows. And then I saw this level right here. You see the first test of it. Of course, couldn't break out, but it still continued to make higher lows. And the way I saw it is, if it breaks this level, this 779, 780 level, this could really reverse and squeeze some shorts. So this was my trigger right here. This was my trigger candle, because I did see a strong candle with some decent volume. If you guys can see this is nice, decent volume, which if you look at the volume, it's definitely above average than some of these consolidating volumes in the upward trend. So I got in. I risked, it was actually more like a one-to-one trade. I risked 50 cents to make 50 cents. So I did buy around 780, and I did sell actually around. The weird thing about this, I ended up selling at 849, 850, because the way I saw it, the $8 was the kind of like the even number breakout. But when you include that I actually got in a little bit earlier at 780, I actually made more than a one-to-one trade, more like a 1.3, 1.5 versus reward. But at the end of the day, that's what matters. I made money on a really good high probability trade. So that was my first trade. Now my second trade, now again, this is a momentum squeeze type of short. You're squeezing shorts pretty much. That's how you make money on this trade. You're literally squeezing out shorts. Now my second trade was actually DWT, which is UWT, which is the ETF that tracks oil. So when oil goes down, which is UWT, DWT goes up. It's pretty much the inverse. That's pretty much what it is. It's the inverse. So I did see this in my scanner. First of all, that's the reason why I traded. I saw it on my scanner, and I did notice that USO or UWT was also selling off. So if you look at the chart USO, there's definitely like a downtrend. And this was in my scanner, so there's momentum. There's absolutely momentum. The volume is there, so they could definitely give an opportunity to trade. So the next thing that I looked at is the intraday. So let me look at my, the thing that I looked at. What are the support and resistance levels? So the first support or resistance level that I see was this right here. It filled this gap, but then you have this gap right here, and you have a top right here. So it's resistance. So I saw it as 710 was, I guess, a resistance or support, because again, price did break above that, so that was now my support. And in terms of resistance, again, there's really no major resistance until you probably get into like 9, into this chart. So there's definitely an opportunity for more continuation in this trade right here, if you really think about it. But again, today, it gapped up, and there's volume, so there was some momentum. So if you look at the intraday, again, gapped up, pre-market, pulled back, and the way I saw it, if it broke the high of the pre-market level, this thing could keep trending, and that's pretty much what it did. So if you look at it, it's above the VWAP, excuse me, and when it broke the 726, I believe I risked 5 cents, actually 10 cents to make 10 cents. So I did buy around 726, 27, and I did sell around 730. Actually, I bought around 728 to sell around 738. And the funny thing about this is very, very important to understand, guys. When the tickers hit your target, but then you don't get a fill, and then price just starts to get a little weird, you may want to get out, because this thing can reverse. Now, I did get out at 735, so I got a little bit less than 1-to-1, but that's fine. It was still a winner, because the last thing I wanted to do is for this, because I did sell right here at 911. The last thing I wanted to do is for this to kind of pull back like this, and then I miss my opportunity to cash in for a nice reward. So sometimes it's okay to sell and take your profits when you see a candle that may reverse. And again, the last thing you want to do is lose those profits you already have. Why would you want to do that? You want to keep the profits that you already have. So that was pretty much it, guys. Those were my 2 trades. Now, these are momentum trades. Again, let me repeat it. It's very, very important. It took me a long time to understand this. Momentum is what pays you. The pattern is really just what you use to get paid on the momentum that's happening on that stock. So again, if you just have a pattern, that you're good at trading, but there's really no momentum, no volume behind it, there's most likely you're not going to make money. And that's one of the biggest things that always affected my trading is what I will see a good pattern, but it lacked volume, and I usually will trade it, but then I will lose the money because it didn't have that that push to really push it to be profitable. So again, guys, momentum is key. When you have momentum, a good pattern, now you have a high probability trade. Alright guys, so that's pretty much it. I hope you guys enjoyed this video. I hope you guys learned something, and you guys will hear from me soon. Have a good one, guys. Peace out.